Get ready to embark on a journey into the fascinating world of the stock market. In this exploration, we're not just scratching the surface, we're diving deep into the mechanics and significance of the stock market. Guided by the insights from A Random Walk Down Wall Street, The Intelligent Investor, and How to Make Money in Stocks, you're about to gain a profound understanding of how the stock market operates and why it's a critical player in shaping personal finances. What is the stock market? Imagine the stock market as a bustling financial metropolis where economic transactions take center stage. It's a vibrant hub where individuals and institutions come together to engage in a fascinating dance of buying and selling stocks. These stocks represent ownership in publicly traded companies, each share a piece of the larger puzzle that makes up the company. Burton G. Malkiel, in his book, A Random Walk Down Wall Street, introduces us to the concept of market efficiency. This idea suggests that stock prices reflect all available information almost instantaneously. Imagine trying to solve a jigsaw puzzle with pieces changing shape and position rapidly. This is the challenge of consistently outsmarting the market. Understanding market efficiency reshapes our perspective on investing, emphasizing the importance of a diversified portfolio. By holding a variety of stocks, you reduce your exposure to the unpredictable fluctuations of individual companies. The importance of investing. Think of investing as a journey to financial empowerment and security. Benjamin Graham's The Intelligent Investor offers a guiding light with his concept of value investing. This strategy involves seeking stocks that are trading at prices lower than their intrinsic value, a bit like finding hidden treasures in the financial landscape. Picture your investments as seeds planted in a garden. Over time, these seeds grow into sturdy trees that provide shade and bear fruit. By nurturing your investments and allowing them to compound, you're not merely accumulating wealth, you're creating a solid foundation for your future financial well-being. Graham's philosophy encourages us to be patient and disciplined investors, focusing on the long-term value of companies rather than short-term market fluctuations. Stock market participants. Imagine the stock market as a grand stage, with various actors playing distinct roles in the financial drama. On this stage, individual investors, motivated by personal goals, interact with institutional investors like pension funds and mutual funds, which manage vast sums of money on behalf of many individuals. Speculators are like the risk takers in this play. They bet on future market movements, hoping to capitalize on price fluctuations. On the other hand, traders engage in swift transactions, aiming to profit from short-term opportunities. How to Make Money in Stocks by William J. O'Neill reminds us of the crucial role psychology plays in investing. Fear and greed can drive decisions, leading to emotional reactions that may not align with a rational investment strategy. Navigating this diverse cast of characters requires a clear understanding of your own financial goals and a commitment to remaining level-headed amid the market's emotional ebbs and flows. How stocks are traded. Trading stocks is akin to participating in an intricate ballet where coordination and timing are essential. Your ticket to this financial performance is a brokerage account. Just as you browse an online catalog and make a purchase, you use your brokerage account to place orders to buy or sell stocks. Behind the scenes, stock exchanges like the New York Stock Exchange, NYSE, and NASDAQ serve as the theaters where this financial ballet unfolds. These exchanges facilitate the smooth execution of trades, ensuring that buyers and sellers can come together seamlessly. Bid and ask prices are like negotiations between the cast members, buyers and sellers, determining the final price at which a trade occurs. In this intricate dance, all participants find common ground as they pursue their financial goals, and understanding the mechanics of stock trading gives you a front-row seat to this captivating performance. Types of stocks. Imagine the stock market as a theater, with each type of stock playing a unique role in the financial narrative. Common stocks are the lead actors. They grant you ownership in the company and a voice in shareholder meetings. When you own common stocks, you're essentially becoming a partner in the company's journey, sharing in its successes and challenges. Preferred stocks, on the other hand, are like supporting actors with distinct perks. They grant you priority when it comes to receiving dividends, allowing you to enjoy a slice of the company's profits before common shareholders. However, preferred shareholders often don't have voting rights in company decisions. Value investing, as introduced by Benjamin Graham in The Intelligent Investor, encourages you to focus on a stock's intrinsic value. Imagine assessing an antique's value before making a purchase. Similarly, understanding a stock's true worth involves evaluating its financial health, earnings potential, and growth prospects. By analyzing intrinsic value, you're making informed investment decisions that align with your long-term goals. Market indices and performance. Market Indices act as a compass, guiding you through the complex landscape of the stock market. They're like a snapshot of specific groups of stocks, allowing you to gauge the overall market's performance. The S&P 500, which comprises 500 large-cap companies, is a well-known benchmark that reflects the general market trends. A random walk down Wall Street introduces the efficient market hypothesis, suggesting that stock prices quickly absorb all available information. This means it's challenging to consistently outperform the market, as prices swiftly adjust to reflect new data. The implication: instead of trying to time the market or chase quick gains, consider adopting a long-term investment strategy that aligns with your financial goals. Investment strategies and risk management. Investment strategies are like different paths leading to the same destination: financial growth and security. Value investing, pioneered by Benjamin Graham, encourages you to seek undervalued stocks with strong fundamentals. Growth investing, on the other hand, involves identifying companies with promising potential for rapid expansion. Technical analysis examines price charts to predict future price movements, akin to studying historical patterns. Risk management is a crucial aspect of successful investing. Imagine your investment portfolio as a garden with diverse plants. If one plant falters, others can thrive and compensate for the loss. Diversification involves spreading your investments across various assets, industries, and sectors to reduce the impact of a single company's poor performance. This strategic approach helps safeguard your investments against unexpected market shifts. Long-term benefits of stock investing. Investing in stocks is more than a short-term venture, it's a journey towards long-term financial growth. Stocks offer two primary avenues for building wealth: capital appreciation and dividends. Capital appreciation refers to the increase in a stock's value over time, while dividends are periodic payments distributed by the company to its shareholders. How to Make Money in Stocks advises the principle of letting winners run. Much like tending to a garden, you allow successful investments to grow and flourish over time. On the flip side, cutting losses short is akin to trimming struggling plants. By promptly addressing underperforming stocks, you prevent potential losses from accumulating. Remember, these investment principles are not rigid rules, but rather tools to help you navigate the intricate world of stocks. By combining these strategies and approaches, you can craft an investment portfolio that aligns with your financial aspirations and risk tolerance. And there you have it, a deep dive into the heart of the stock market. Armed with insights from these books, you've uncovered the essence of investing in shares and the forces that shape market dynamics. Remember, this is just the beginning of your journey. Books like A Random Walk Down Wall Street, The Intelligent Investor, and How to Make Money in Stocks hold even more treasure to explore. As you set foot on your investing path, remember that every financial decision is unique. Seek advice from professionals who can tailor guidance to your individual circumstances. Before you venture into the world of stocks, a friendly reminder: this content is educational, not financial advice. Your financial circumstances are distinct, and it's crucial to consult experts before making any investment decisions. So, embark on your journey with a blend of curiosity, prudence, and professional guidance.